Hey guys, Joel Frank here, market analyst for YouTrading, and today we're going to be taking a quick look across asset classes, giving you a bit of a market update, and then we're going to be talking about what to expect this week, what's on the calendar, what themes are going to be in play. So let's jump right into it. We'll start off here. We've got the, this is a CFD for the S&P 500 futures, and as you can see, these are the daily candlesticks. We've got a small red candle, slightly cautious start to the week, although to be fair, equities still in a sort of tentative uptrend since posting yearly lows in mid-June. Now, whether this tentative uptrend can continue this week, I think is going to be a big question, because if we break this trend line on unfavorable macro events, and we'll go through what they might be, there's certainly the possibility of a retest of last week's lows, or even worse, annual lows, if things go really badly, because you can see that we can recently we've seen moves lower like that in a couple of days, like these 3 negative days here from back in early sort of June. Are we going to get a repeat of that this week? Who knows? What about oil? Let's have a quick look at oil. We're hovering just above $100 per barrel. We've kind of been pivoting either side. We've got some key support here from... so this jump here is the Russian invasion of Ukraine. And then ever since then, there's sort of been support in the 95 area. We're not below that yet, but it does look like we're definitely in a bit of a downtrend in oil. I mean, these don't line up perfectly, but in oil it doesn't really have to. It's more just about the general idea. It does look increasingly like the world economy is moving towards recession, and if the economic data in the coming months continues to weaken substantially, then maybe this oil bull market that carried us, if we really zoom out, it's been going on since these pandemic lows. A break below here, I think, would mean that there's a lot of selling in store. I mean, you potentially would expect oil to at least go back to sort of this area here around 85. And then, man, if we went below that, things could get really, really ugly for oil. Obviously, things would need to get bad, very, very bad for the global economy, US recession, European recession, all these kind of things. And these things aren't a certainty yet. But things aren't looking great. And might as well talk about one of the main macro themes this week. The Nord Stream 2 pipeline, which carries a large amount of gas from Russia directly to Germany, has been closed down for 10 days for maintenance. It is planned, it is routine maintenance, but there are a lot of fears going around that Russia is basically never going to reopen it as a way to punish Europe, for their support of Ukraine and all this kind of stuff. Fears are very, very high about a Russian embargo on oil exports to Europe, which is very likely to tip the European economy into recession. I mean, it might already be in recession. And, we're talking about Europe, might as well look at currencies, because this is the big story in currency markets at the moment. Euro dollar at yearly lows here, or just above yearly lows. Well, actually, not even yearly lows. If you're on like a month candlesticks, you can see we haven't been at these levels since, December 2002. A test of that parity level, which is here, if I can line it up right, well, close enough, seems very, very likely. In terms of the calendar, what we got out of Europe this week, it hasn't come up here, but we do have Eurozone industrial production, which has been under pressure recently, and, ugly European data this week could make things really, really bad for the euro. So I think this is going to be one of the big stories to watch this week. And if we did see euro dollar breaking below this level, well, then that could have cross asset implications. Safe haven demand for the dollar being seen in currency markets could translate into weaker equities, which could be a break of that uptrend, that recent uptrend that I showed you. This one here. Downside in oil, because oil doesn't like a stronger dollar. Things could really affect on a cross-asset basis. Anyway, let's have a look at some other major currency pairs. You can see cable, GBP, USD, in a bit of a descending triangle. That looks pretty ugly, doesn't it? Looks like a downside break of the sort of 119 level is very much a possibility. Remember, when things are bad in Europe, things tend to be bad in the UK as well in terms of the economy and all that kind of stuff. So we could very much see that go lower as well. Dollar yen also pushing to yearly extremes, or a bit like euro dollar, we're at multi-decade extremes actually. Wow, you have to go back to 1998, the last time we were at these levels. Although you would think that the upside for dollar yen on global economic concerns there's not quite as much room for upside as there would be for downside in euro dollar, because the yen is a safe haven, and if bond yields are falling globally to reflect recession risk, then you would think that maybe dollar yen won't have loads more room to run to the upside. But anyway, let's really dig into the calendar now, and we'll talk about the sort of key risk events that we're awaiting this week. Okay, so Monday, pretty quiet. Okay, Bank of England Governor Bailey speaking later. Yeah, I mean, if you're a sterling trader, that's worth watching. Tuesday, again, pretty quiet. Bank of England Governor Bailey speaking again, but things really spice up on Wednesday. Okay, you got the RBNZ rate decision. That could be a big one for the Kiwi, especially if they start sounding a little bit more dovish, which is a possibility. I mean, as you can see here, they are expected to lift rates to 2.5% from 2%, but the economic outlook globally has deteriorated since their last meeting. So a dovish RBNZ could weigh on the Kiwi. UK GDP, a lot of concerns about the UK economy. That could weigh on sterling if it comes out worse than expected. You see, it's expected to remain flat on a month-to-month basis. I believe that will be for May. But if it's negative, sterling won't like it. This is the main event of the week, guys. US consumer price inflation data for June. That's out on Wednesday. Obviously, high inflation in the US is the primary driver of Fed policy at the moment. And what is the Fed doing? Aggressively raising interest rates. And they're expected to do another second consecutive 75 basis point rate hike later this month. This data, I think the consensus was, well, look at that. Another month where prices have gone up more than 1% in a month. That should really solidify that there's going to be a 75 basis point rate hike coming later this month. But traders are starting to sort of turn, or for a while, they've been more focused on what is the Fed going to do in 2023, because if there's a US recession around the corner, are they going to be more dovish in 2023? Are we going to get rates back to like 3% or just above 3%? And then lower them again in 2023 if there's a recession, and that helps bring inflation under control. These are all some of the things that we've also got to think about. But anyway, there is a risk upside inflation surprise could really strengthen the dollar, strengthen US yields, and weigh on risk assets. So that's worth watching. Then BoC shortly after for the CAD traders to keep an eye on. They're expected to do a 50 basis point rate hike just like the RBNZ. Moving on to Thursday, Aussie jobs data. Aussie traders be watching that as always. The RBA is also aggressively tightening, and they will want to see that the labour market is still holding up well, and the data is expected to show that that will be the case. Then you've got US PPI, but I mean obviously the main focus is US CPI. A bit of Fed speak, Waller speaking, Christopher Waller, he's one of the more important Fed members. Then on Friday you got Chinese data, GDP, retail sales, I think you've got industrial production as well. That is a big focus at the moment, guys, because actually, obviously, China has been in and out of lockdown. I think this weekend just gone, they've just implemented some more lockdowns. And it does not look like they're going to come anywhere near their GDP target, which I think is still 5.5% growth for this year. They're not going to come anywhere near that, really. Let's get realistic. So anyway, that's a key focus at the moment. Obviously, China's second largest economy in the world. Then focus returns to the US with retail sales data, because like I say, potential recession around the corner. US consumers struggling with high inflation, increasing interest rates that are, making their mortgages more expensive, all that kind of stuff. How is the US consumer holding up? And then we'll get another insight into the consumer from this the University of Michigan Consumer Sentiment Survey for July, which is out a couple of hours later. So a lot of risk out there this week, guys. a lot of stuff on the calendar to keep an eye on. So hope you enjoyed the video, hope you're prepared for the week, and I will see you all in the next one.